All right, welcome back to this week's breakout watch list from October 24th to the 28th. On Friday, we got a follow-through day in the market. The indexes are back over their 8 and 21 EMAs, and it's time to start looking for some long setups. That's why in this video, we'll be covering the top 10 setups going into next week. Each of these stocks either have strong fundamentals, come from strong groups, or have volume patterns that lead to uptrends. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the setups. Here are the 10 stocks that we'll be covering in today's video. If you're coming here for a specific setup, there's timestamps in the comment section below so you can see exactly what you want. But your time is valuable, there's a lot of charts to cover, so let's get to it. The first stock that we'll cover today is ACLX. This is a biotech stock, and right now biotechs are the 7th strongest group out of 197 in the market, so we do add probability to our side by trading in a stronger group. Now I think I've had ACLX on a breakout watch list before, but it just continues to tighten up and improves the setup. So this is one that had a really strong break from $6 all the way up to 26, but with that kind of move, as expected, you get a major pullback from 26 down to about 13, about a 50% pullback. And when you have a 50% pullback, you got a lot of people trapped at these higher prices, and it takes a while for the pattern to really build out for a low risk entry point. And you can see this, we kind of peaked on June 10th. And from that point, yeah, there were some swing trades you could have made in here, but we still haven't had a really low risk setup until this week, or at least going into last week. Last week, we had this nice pivot right at 1980. Monday, we actually saw a shakeout under all the key moving averages, and we closed under those moving averages. So I thought this might just roll over, but we popped back on Tuesday and then just traded sideways the rest of the week, closing right at the high of the week on Friday, 1977 there. So same pivot that we talked about last week, 1980. Let's see. Yeah, about 1980 as a potential entry point. By doing so, you get in a little bit before this nice round number of $20. I think that 20 will be a liquid area where we'll see a giant burst, and from that point on, we're still in a bear market, so it might be an area where people are starting to take profits. So that's why I want to get in a little bit earlier, around 1980 for ACLX. The next stock that we'll cover was also on last week's list. This is AMR, the coal stock. Energy and coal, 9th strongest group out of 197, so A+ group strength rating, 99 overall composite rating, 99 individual relative strength rating, very strong fundamentals, kind of checking all the boxes here. Last week we had a really nice pivot to work with around 155. This past week we had some volatile trading action where this seemed like it wanted to rally, but for some reason the other coal stocks, CEIX, ARCH, BTU, kind of sold off earlier in the week and then had a late week rally. So this did pull back to the 50-day EMA along with the 21 EMA and found support right around there and around 150. And similar to ACLX, had a nice close on Friday. Many of the stocks did because the market closed very high on Friday. But with this, looking for a breakthrough, basically Friday's high, 157.44 as a potential entry point. The theme last week was oil and gas stocks, and there are still a couple setting up, so I wanted to put one APA on your watch list. This specific stock comes from Oil and Gas International Exploration, 6th strongest group in the market out of 197, so A+ group strength rating, A- accumulation distribution, meaning many of the heavy volume days have come on up days, and low volume days come on pullback days, which is exactly the volume pattern that you're looking for. 99 overall composite rating because it has very strong fundamentals, and a 97 individual relative strength rating. All good things, checking all the boxes there. As you can see, a lot of oil and gas names kind of peaked out in June and then flushed. This had about, well, we can see it on MarketSmith, a 42% pullback and kind of cup and handle here at 11% pullback in the handle. This has lasted for 95 days. I really like that MarketSmith gives this little cup and handle detail information. From here, we could have had an entry point on Thursday, but that actually gapped up and then we sold off the rest of the day. And then Friday, we reversed that rally, closed near the high of the day. Ideally, we do have a couple of days for this setup. Ideally, we have a couple pullback days in the market early in the week, and then we can attack this Friday's high, 43.20, with a little bit more buying power after that gets reset there. But APA, oil and gas in general, right now I own the stock ERX, which is the 2 times performance of the energy sector. Next we have CEG. This is an energy alternatives other, 25th strongest group out of 197. This group has started to fall out of favor a little bit, but CEG individually within that group has held up extremely well. You can see the relative strength line as the market comes crashing down. This has just been basically trading sideways, so that relative strength line continues in an uptrend. Had a nice shakeout on the 13th here under the 50-day moving average, but we closed above. And then as the market sold off the 14th, this looked like it was going to join the other alternative energy stocks and roll over. Closed under the 50-day moving average, but that next day we popped right back up through the 50, the 8, the 21 EMAs, closing near the high of the day there. And then just trading sideways, very strong close on Friday, similar to many stocks. Another setup that would do well if we had some consolidation days in the market, Monday, Tuesday, then attack the Friday's high, 87.46 with a little bit more buying power. Or if this comes back into the 8 and 21 areas, right around $85, that's a potential entry point. And then you can manage your risk with the low of Friday's price action and under the 50-day moving average. Might be a better area for risk reward there, right around $85 for CEG. The next stock we have is the fertilizer stock, CF. Now this is in chemicals and agriculture, which this group itself, 102 out of 197, isn't very strong. But this stock individually, 99 earnings per share rating, B accumulation distribution, 98 overall composite, very strong fundamentals, and a 98 individual relative strength rating. Kind of overweighs the group strength at this point. This is one that was on kind of leadership watch in August, putting in new highs, and then had a very quick pullback through the 8, the 21s, and then breaking under the 50-day, and found support at the 200-day simple moving average. Same spot that it found support at the last pullback. When was this? In July. From here, put in a higher low through under 100, and then really nice volume the last couple days, above average volume 3 of those days as we rally through the 50, the 8, the 21 moving averages, closing near the high on Friday. This is one, same thing. More tightening action would be ideal here, but a break over Friday's high, 107.76, is a potential entry point for CF. Next, we have CLFD. This is in telecom fiber optics, the 22nd strongest group out of 197. Along with that A group strength rating, this also has 99 ratings in earnings per share, relative strength, and overall composite basis. So it checks a lot of the boxes there. We have strong fundamentals. This was a leadership stock that I was watching up until the end of August, where this cut through the 8, the 21, and the 50-day moving averages pretty quickly within maybe 3 weeks. From there, it found buying support at 88.50, had that initial rally back up to the 50-day, which the first rally back up to the 50-day after you cleanly cut it typically gets rejected, which we saw there. Came back under 100 and the 8 and 21 EMAs for a little bit, but as you can see on Friday, we're back over all the key moving averages, closed back over the 50-day, up 4.7%. Ideally, we get a couple sideways action days while the 8 and 21 EMAs catch up to the price, and then we could take out Friday's high, 107.70 as a potential entry point. One thing to warn is this only trades about 250,000 shares a day, so if liquidity is an issue for you, maybe you have to pass on this one. The next stock that we have is CTKB, and shout out to Javi for putting this on my watch list. Medical research group, 171 out of 197. The group isn't very strong, but this stock individually went from $7 all the way up to $16, so it's already rallied 100% off its lows. And as the market continued to put in lower lows, this put in higher low here, higher low here, higher low here, higher low here. So that's showing that the stock is being accumulated even though the markets are selling off. Great sign of relative strength. And as you can see, that relative strength line, the blue line here, continues to be in an uptrend. Right now, we have the price above all the key moving averages, the 8-day, the 21-day, the 50-day, and the 200-day. And we're starting to see that 200-day start to curl up, which is great to see. With this, we have a 3-day pivot right around 15.25, so that's the potential entry point. And if we do get a kind of shakeout like we saw on Wednesday under the 21 EMA, that improves the setup because it is slightly a less liquid stock, only 716,000 shares traded a day. So the more kind of shakeouts that we have until a very tight price action, the better the setup is. And one more would be ideal, but looking at 15.25 as that potential entry point for CTKB. Next, we have the computer software stock, NTNX. Computer software is starting to move up the ranks, 69th strongest group out of 197. B group strength rating, A- accumulation distribution, 69 composite because the fundamentals really aren't there for this. But this is another stock that has been moving up from $13.44, putting in a bunch of higher lows and is now at $26. So already 100% off its lows while the market continued to put in lower lows. Great sign of relative strength there. This is one that had a high volume move on September 1st, was up 29%, on 700% the average daily volume, and actually tried to rally through the 200-day moving average. But as you can see, the market backdrop just didn't allow for that. As the market was selling off, this sold off as well, but came back into the 50-day moving average, came back into $20 and found support right around that area until another gap up, which when it pulled back, the low of the day there was $24.99, right at $25, showing some liquidity coming into the name and supporting that action. And from there, we've had really tight price action, which is nice to see. Looking for a break over Friday's high, $27 as an entry point for NTNX. Two more stocks for you, but really quick, if you guys are enjoying the video, please take 1 second to hit the like button and subscribe to my channel. I make breakout watchlist videos like this on the weekends, along with other trading related videos. Thank you guys so much for your support. Back to the video. Now we go back to biotech stocks. Again, biotech's 7th strongest group out of 197. This stock is PRTA. It's got that A+ group strength rating, A- accumulation distribution, 84 composite, which is pretty high for a biotech stock, 99 individual relative strength rating, but not very strong fundamentals to talk about here. This is one that had a very high volume move, about 1,600%, the average daily volume, up 87%, closing in the 90th percentile of the daily range on this day, the 28th of September. From there, as the market rallied, this rallied up to $64, and then as the market came down, this has been kind of trading in line with the market and starting to flag out really nicely. It did undercut the 8-day EMA, but as it came into 50, it got supported. The low of the day here was 50.89, so buyers are supporting this $50 area. Shoots up as the market rallies and then consolidates nicely. So a couple more tight trading days under Friday's high would be ideal here. But again, just kind of a downtrend line that we're looking at and a break over Friday's high of 58.50 for PRTA. And the last stock that we'll cover today is SWAV. This is in medical systems equipment, the 31st strongest group out of 197. So A group strength rating, C+ accumulation distribution. Lately, some of the heavier volume days, like this distribution day, came on heavier volume. So that's one kind of a yellow flag for the setup. But strong group, 94 composite rating, very, very strong fundamentals. Earnings per share were up over 1,000% year over year last earnings. Sales up 116, after-tax profit margins up 21%. And this is one where you could draw a nice clean downtrend line that hits 4 times, 4 points as it keeps railing up to that and then pulling back. It did close back over the 8, the 21, the 50-day moving average on Friday with a nice close up 2.1%. And this is one where we've seen resistance at this downtrend line. There's no reason to fight that. So I'll be looking for a break over the downtrend line. So depending on the day, if we do that on Monday, it would be closer to 280. If we do it later on, it might be closer to 277. So really looking at the downtrend line for SWAV. And that's going to be the breakout watch list for the upcoming week. It's actually exciting getting to talk about stocks on the long side after we've had that follow through day, but it doesn't mean we're going all in on Monday. Remember, practice progressive exposure. A big thanks to MarketSmith for sponsoring this video. If you guys enjoyed the trading research platform that we were using to break down each of the stocks, you guys can try it out yourselves by using the link in the description below. And finally, if you want to hear more from me throughout the week, you can follow me on the other social media sites. I'm at Nick_Drendel for most of them, but on Twitter, I'm at Nick Drendel. I hope you have a great week, and I'll see you guys in the next video.